And I also love, again, that you're using the data here. So, I mean, are you seeing any sectors that maybe aren't getting enough love from investors right now? Or maybe any sectors that you may be moving into in the future?
So one of the, I was telling you that I thought small businesses would be some of the biggest
Yeah.
beneficiaries. The debt crowdfunding, for the life of me, I don't understand why it's not bigger than it is.
Mhm.
One in four offerings are debt offerings. There's only a few platforms that are the debt platforms. Honeycomb and the SMBX are two of the bigger ones in the debt space,
Mhm.
but they're not getting the traction that I thought they would get. The average raise is about $100,000. So it's far from what the equity side, which is, over $1 million at this point. And I just figured there would be more small businesses that are like, I can't get a bank loan, coming onto these
Right.
platforms and saying, I want to raise money, because it works. The other thing that our data set shows is only 21.7% of the companies since 2016 have gone out of business. And so when you compare that to what the SBA says is about 50% of startups will go out of business in the first 5 years, we can show the resiliency of companies that raise money through investment crowdfunding because of that engaged community. So I wish more of the small businesses, more of the Main Street America type businesses would see this as an opportunity. You know why? Also, the average yield of these right now is about 10%. So if you're an investor and you want to invest in one of these local businesses, I mean, you're not going to get 10, with the way the stock public markets are, who knows where they're going to be heading. But, it's a pretty steady return. And you know what? The default rate on the community-backed loans, these debt crowdfunding deals, is far less than even a bank loan. You know why? Because these businesses do not want to let down their customers that are their investors. So it's a self, you know, prophecy. It's like it
Right,
builds
right.
upon.
Like Ramin Bank, right? Is that the idea here?
Yeah.
Only I think it was a little different because then I think the main idea that he had was that if you have a group of people that are all, in the same community and you say, hey, I'm trusting you all to pay back this loan or we can't do this anymore, right? But same idea, right? I mean, you're really going in there with the peer pressure in a good sense, like, hey, let's be good citizens and let's pay these loans back.
Absolutely. And people just don't feel that way with the bank.
For some reason. So I guess we kind of touched on emerging markets or other geographies. I know by the nature you're focused on the U.S., but as an investor in general, I mean, are any other emerging markets or geographies that you're keeping your eye on?
I mean, one of the coolest things that after we signed the law here in the United States, the World Bank said, what you guys did here in the United States is
Yeah,
amazing, but the rest of the world actually needs us more so than the US.
sure.
And so we wrote the World Bank report, Crowdfunding's Potential for the Developing World. They flew us around to 43 countries to work with regulators globally. And we've gotten these crowdfunding ecosystems up from Mexico to Chile to Saudi Arabia, even, all over Asia, Malaysia, and Thailand.
Mhm.
This is pre-marriage and kids, so it was really fun. Now I don't
Got
do
it.
nearly that much traveling. It's a global phenomenon, and it
Yeah.
is amazing to see how, this is just changing the way startups are raising capital.
Yeah, very, very huge. Well, I'd love to talk a little bit more about your company. Do you have any sort of fish that got away stories, companies you wish you would have invested in but took a pass on that you can tell us?
Not yet. I mean, the one, we've invested in the platforms themselves because we believe that, if you're going to invest in the ecosystem, you might as well invest in the platforms that are doing well. We didn't get in Start Engine from the fund perspective. Now, I did personally early on,
Mhm.
but the fund didn't get in early enough on that, and
Yeah,
now their valuation's just way out of line, and we
yeah,
can't invest in that. But for the most part, you don't really have these stories of getting away, only because these companies are doing. This is the other thing. You might remember this lean startup methodology that was popular in the early 2000s.
should you talk about Eric Ries?
There you go. Yeah. So that whole process of companies that would only raise as much capital as they need and spend it very frugally. And it was this whole thing of like, don't, let's not waste our money. We're back to that sort of thinking with these companies
Yeah.
because there's no capital out there. So you have to be really judicious with the capital that you have. And so we're merging the principles of lean startup methodology with investment crowdfunding. Companies are raising in these tranches and these rounds. Smaller rounds, you can raise up to 5 million, but it allows you to not miss out. Because like we've looked at deals where like, it's interesting. Let's see what milestones they hit for this round. And if they achieve them.
Yeah.
Now, 20% of the data set's coming back for a follow-on round. So we know we've got a 1 in 5 chance of seeing these companies again and deciding, hey, did you do what you said you were going to do? Did you hit those milestones? Did you spend the money the way you say you were going to spend it? And then now we sort of make that investment decision. I wish I had invested in Boxable. I don't know if you know about Boxable, but they build these little casita homes. It's like a phenomenal solution to a housing crisis where there's floods or natural disasters. They've graduated out of Reg CF. I think they started at a $24 million valuation in the Reg CF round. This is way early on. And now they're at a $3.4 billion valuation.
Yeah.
So they got away.
Yeah, pretty cool stuff. I mean, and I know that everybody in the business to have some stories like that, and it's really cool just I think to be playing in that I don't know what to say. I just geek out on this stuff. So yeah, I think I want to talk about founders next. Can you tell us about the most inspiring founder you've had the opportunity to back?
The most inspiring founder. Recently there was a doctor that we invested in from a company called Healthcare Originals. And she's an Indian doctor by background, and she's raising money online. She has this device that can show you if you're going to have a COPD event. So it's asthma related 3 months in advance. And it attaches to the body, and it's a listening device, much like a stethoscope listens. And when we were meeting with her and listening, she's like brilliant. You can just tell when you're talking to these people how brilliant they are. And on the one hand, you're like, I totally get it. I love your, the technology you've built. We've dug into it. And we're like, why didn't you go to venture capital? And she was just very transparent. She's like, I don't know any. And I didn't think my chances of success would be that good. So I went where I thought I'd have a much higher chance of success. And she's a breakout case of, a company that's doing well. By the way, I'm pretty sure it's released right now, but they just released a massive deal with a substantial multi-million recurring revenue contract that comes with it. That was an aspirational thing when we invested that is fundamentally changing their valuation now. So, that's, it's just, the data set's full of them.
Love it. Love it. And so what would you say are the top traits you look for in a founder?
It's a lot of the same stuff that I think that venture looks for anyway. You want people that have experience in an industry. You want people that have hopefully done a similar type of thing before and maybe had an exit or worked for a company that had an exit. Because in doing so, they've learned how to raise money, they've learned how to spend capital, grow a team. We look for people that have really spent the time thinking about how they can protect their moat. It's really important that they think that way. And we're looking for teams. Solo founders, I think there's been enough research now that shows that their success rates aren't as high as we would think them to be when they have a founding team that consists of 2 or more founders, because those people are brainstorming and bouncing ideas off of each other. So we look for that type of stuff too.
Yeah, awesome. Well, if you had to leave the world of venture capital and launch your own startup again today, what problem would you try to solve, or what industry would you jump into?
Okay. I'm going to jump out of everything and I'm going to go into pies. And I only say that because we go to Hawaii every February for a family vacation, and we stop at this pie shop every time we're on our way to where we're staying. And I've never seen a longer line. And all I keep on thinking is they're charging $10 for each of these pies. They're just rolling in the cash. Like I can make a bunch of pies and just step aside from all the stress of everything and just, live as a pie maker.
All right, love it. Well, my son is a chef in training, so maybe I will introduce you to. You can
That would be great.
figure something out.
Right.
So, how do you keep your edge? Like books, routines, exercise, networking? What keeps you on top of it all?
I am rigorous in a routine. So I naturally wake up at 5:30. And I get up and that's when I check emails from the night before, make sure I'm not missing anything. We live in the world of data, so our data comes in all day long. I get reports about the previous day's data, so I'm looking at that. But once I get that done, I am at the gym and I'm exercising. And that is a part of my day that is really critical because it helps keep my brain clear. And then I leave from that to get the kids ready for school and out. And then it's just a lot of work. Our days, start right after drop off. And even when I get home at night, I can be done with dinner, but it's, sitting down and making sure I haven't missed anything. So I do try and take the weekends to do stuff around the house. I am definitely a person that does nonstop. So like this weekend, I was planting the garden, getting the vegetables all in place, getting flowers out for the summer. So it's nonstop with me.
Love it. That's beautiful. Yes, we've got our own herb garden out here. Uh, Mainly my son's work these days. Always got something new that I've never heard of growing out there. So, what's the best advice that you've ever received as an investor?
As an investor, the best advice it would probably come down to fail fast and understand that failure is part of the process. Don't bemoan it, move on. We can all see the mistakes that we've made, take note, but don't let it drag you down. And I think that's the key part of this whole thing. You don't want to risk more than you can afford to lose. It doesn't matter what part of the capital markets you're in. But it's also, risk and reward go hand in hand. You will have periods where you make some, and you will have periods where you lose, and you want to minimize the losses, but you don't want to jump out of, opportunity just because there's losses there.
Hey, and I love to ask people about their three greatest strengths, and you listed dedication, determination, and empathy. And I wonder, can you give us an example of how your empathy helps you to grow the bottom line in your business ventures?
I am very connected to people and their stories because if there's one thing I've come to realize is we are one part of a whole. And when I say that we're one part, I mean our business side is one part of a whole human. And I really want to know what is happening in other people's lives to make sure that they're making the right decisions when it comes to business. And so you'll often hear me talking about, family. What are you doing outside of work? What makes you happy? Because I realize if you're not happy externally, you won't be happy with your business life as well. And so even with, my friends, and we talk business and all that stuff, it all comes down to them first and then business second.
All right, love it. And I want to make sure that, we do have a lot of passive investors. That's largely what we're about here. I mean, I think that isn't that the holy grail? At some point, you want to leave this rat race and hopefully just be the passive investor. And I guess for you, it would be taking that trip out to Hawaii every February. So, what would you say to someone who's thinking about getting into either seed stage or going into a venture capital fund?
I mean, listen, if you've got the time, I think, it's worth exploring what's happening in your community, where these offerings are taking place, and maybe looking at investing in some of them, becoming active in it. If you don't, I think one of the things about funds like ours is it allows you to diversify into opportunities like this, and hopefully benefit from it in the future. And then, the more capital that you have, I even have money that I've invested in private equity. I love that sort of aspect of investing. It seems to be very, not that there's not risk everywhere, but it's just the strength in private equity, the returns. It's a confident area that I love to be in. But There's no excitement really in private equity as there is in investment crowdfunding. I'll tell you that much.
Yeah, I love the angle, and I think totally true. I mean, just the breadth of options available is so amazing. Well, I'd love to head into the ultimate seven. So something I do on every show. So are you ready for the seven?
Yes.
All right, let's hit it. If you could be known for only one thing, Woody, what would it be?
A father.
What is one mistake that taught you the most?
I called one of my first bosses psychotic and got fired. Only because she asked me to do something and then I did it. And then she said, don't do anything without running it by me. So then I started to run everything by her. And then she said, I need you to start doing things on your own. And by the way, I had a coworker working next to me that was listening to this whole thing as it's happening daily. And I was just like, I don't know what to do. So
I love it. So yeah, I mean, I don't know if I can tell the
don't use
Kevin
psychotic.
O'Leary story, but my favorite is he says that, some of the best entrepreneurs are bad employees, if you catch my drift. I mean it in the nicest way possible. I had a lot of
Right.
times where I felt like, oh my God, I need to leave this corporate environment.
Yeah. Yeah.
So,
Totally.
what personal characteristic has been most pivotal to your success?
It's just determination. I don't give up. I am relentless at just going, going, going. And I think that determination gets me where I am today and where I'm planning on being in the future.
Love it. Okay, we got to shake it up a little bit. Now, some interviews I asked people, crunchy peanut butter or smooth. But anyway, I decided we ditch all the puffballs, but we got to have one fun question. So just let me know when to stop cutting the deck.
Okay, you can stop now.
All right, top question. Totally random. All right, what would you love to find at a yard sale?
What would I love to find at a yard sale? Hmm. Probably a an antique that I could take to that antique television show and think that it's worth, $10 and it turns out to be worth 1,000.
Love it. Can you give us a tip or trick that investors can implement in their businesses today?
Okay. I mean, I think everyone's talking about this. Figure out how to integrate AI into what you're doing. It just makes everything speed up. You can accomplish 10 times more than you were doing before. You'll feel busier than you've ever felt before. It might be a little exhausting at the end of the day, but people will notice that things are changing. So I would tell you to do that. And then, if you're an investor, you need to keep your fingers on the pulse of what I'm talking about and what we've had a conversation about. Because this is still, if we're looking at a baseball game of, 9 innings, we're probably in the second or third inning here. This is going to take over. Will be the concept. You're going to be seeing television shows about this. You're going to be seeing Bloomberg covering it. It's just going to be the de facto early stage funding area. This is where VCs will be pulling all of their investments from. We already see within the data set that almost 1 in 5 of the deals right now have some sort of VC participation. And that's going to be the future of this. VCs are going to be like, this is great. It's been too risky for us to date. Why don't you, crowd, and entrepreneur, take on that risk for us, and then
Yeah.
you bring us the best deals. So, and then if you're paying attention to what's happening in Washington at all, think about crypto, security tokens, this whole blockchain, how it all was developed years ago, but the laws are being written right now that are going to fundamentally change even what I'm telling you about. So I'm telling you, you can invest in a company and get equity. In a few years, you're going to be investing in a company and you're going to get a security token. And that token is going to be held on the blockchain. And that's going to be how that's written in there that you're an owner. But in these tokens, the holy grail is secondary trading. And so there's a holding period on these investments that you make through investment crowdfunding. But after that holding period, you can freely trade these tokens on secondary exchanges. This is, right now it seems futuristic, but that's where we're heading. It's not Bitcoin. It's all of these private companies that some of which will be unicorns, for which investors are going, instead of waiting 5 to 10 years that I was telling you about for that exit, will be able to buy and sell these things on a secondary market and have a return in short term.
Beautiful. Can you tell us one book that every investor should read?
I think it's this one right here,
Of
Investometers.
course, Investometers. And I've been reading it. It's a great read. So go find it on Amazon. I love it. That's how you can tell you're talking to a real author. If they don't have a book with him, have a copy of their book. And
Hey,
who's a real author. So can you send us out with a quote to help forge our listeners as leaders and entrepreneurs?
when you're in a hole, stop digging.
Love it. Classic. So email, website, carrier pigeon, or smoke signals. What is the best way for our listeners to reach out to Woodie Neese?
Investomersbook.com. So Investomer with an S, book.com.
All right. Thank you so much for taking your time to share your knowledge and experience with our audience.
Appreciate it.